Good morning. This is Karen Ainsley at the Indiana State Library. Hopefully you're all here for the annual Public Library Budget Workshop this morning, and this afternoon we have the legislation presentation. Their lunch will be from 12:30 to 2 p.m., but this morning's presentation will start with Dan Jones. Dan Jones is the Assistant Director for the Budget Division of the Department of Local Government Finance. He has over 30 years' experience in municipal finance with a concentration on budgeting and finance reporting. He's been with the DLGF probably for over 12 years? 12 years. So we'll go ahead and get started with Dan.
Thank you. It's always great to see everybody so excited and enthusiastic about starting their budget. That's so heartwarming. Today we're going to start this budget cycle. I'm going to briefly talk about some of the things that happened in 2017 that's going to carry over into 2018, which prepares us for going forward. I'm also going to spend some time talking about some changes that are specific for 2018. A couple of new developments that we have. I am going to review the budget calendar. I know you're probably tired of hearing about it, but it's so critical. The elements in the budget calendar are mostly statutory, and a violation of any of those dates could jeopardize your budget or your levy for next year. I am going to touch on some of the legislation that passed this year. Fortunately, most of the legislation did not affect or impact libraries, which is a good thing. And then I'm going to kind of introduce you to Gateway for 2018, but then we're going to hand off to Ryan Burke, who is also from the DLGF, and he's going to go over some of the changes and developments that we've made in Gateway and get into some of those specifics.
Is it not working? I'm sorry.
It's not changing.
Let me get this out of the way. There you go. Hit next. Let's click on there. Click on next. Sorry.
There we go. Okay, sorry about that. One thing I wanted to mention, this is a little housekeeping for the DLGF. We do have some personnel changes. We have a new budget director for the budget division, and he has joined us this morning. That's Fred Van Dorp, the new director for the division. We also have had a couple of people change careers. We lost our general counsel, Mike Duffy, and field representative Kathy Stockoff. They've all left the DLGF for other opportunities that they're seeking. I also wanted to mention the retirement of Linda Ebert. You may not have ever met Linda or spoken to her, but every time you submitted additional appropriation, it would have gone to Linda. So right now, our processing of additional appropriations is a little slower than it has been in the past, so please be patient with us. Linda is going to be coming back with this on a part-time basis, so we'll be able to streamline some of that process and keep it going smoothly. I also wanted to mention that your contact for any Gateway issues is Billy Ottensmeyer. He is in our Indianapolis office, and if you just send an email to gateway@dlgf.in.gov, it will go to Billy, and Billy will respond promptly. He's been with us for a couple of years, and he does an outstanding job in Gateway. Now, why don't we talk about the 2017 cycle for a few minutes. There was a lot happening last year, and most of it is going forward. One of the largest changes was the local income taxes. There was a consolidation in the statute, or combined the COIT and the CAGIT into one local income tax, and there were a couple of other changes that were made. There was also the budget streamlining. Now, as you recall, streamlining is where your budget can be reviewed by the DLGF in two levels. One would be the normal level. We go through and look at line by line, concentrate on the miscellaneous revenues and the property taxes. And then there was also the streamlined version of the review. If you submit your budget, if you're within the average growth quotient of the previous year, if your levy stays within the average growth quotient of the previous year, and your budget is funded, you could qualify for a streamlined review. That saves us a lot of time in our department rather than going through each budget, fund by fund by fund, and balancing all those. But it's also good for you because it's a little less of that introspection that you get from our part. There's also the net budgeting. If you remember, that's where the budgets had to incorporate the effect of the circuit breaker credits. And that's going to continue. There's no changes in that process. Brian may be going through that in a few minutes, but for the most part, that situation is not going to change for this year. Going forward, we look to having a revised Form 4B, and that's going to change the appearance of some of the calculations, but that's not for this year. There was a change in the non-binding review process last year. As you remember, last year, you no longer have to submit for non-binding review. You have to submit it to a elected fiscal body if you're becoming a binding organization, and that's where your budget, your appropriations are increasing more than the average growth quotient. And that's specific only for libraries, in your cases. Another change that occurred last year that was kind of behind the scenes, you may not have been aware with, the county auditors no longer certify to you and all the other units in your area the assessed values. They give that information to the DLGF. We're going to post it on Gateway, and that's how you will get the information, is via Gateway. Now, of some of the changes that we underwent in the 2017 budget cycle, these were a few of the key dates that we have throughout the cycle. The sales ratios, that's the first step in the assessment process. We received those by June 28th. The first certified net assessed value was received July 13th. The deadline, the statutory deadline for the auditors, or for these to be submitted, let me put it that way, is August 1st. The last certification that we received was on November 22nd, which is considerably later than we anticipate receiving it. The first 1782 notice was issued December 27th. That's also later than we anticipate. Normally, the 1782 notices are going out around Thanksgiving, just in a normal cycle. So this was substantially behind. The last 1782 notice was issued February 3rd. Now that's getting pretty close to the end because the DLGF, our statutory responsibility is to certify all budgets and issue the budget orders by February 15th. And once the 1782 notices are issued, all the units have at least 10 days to respond. So that February 3rd was the deadline for submitting those. As I mentioned, some of those changes from 2017 are going to continue into 2018. That also includes the format of the budget forms that you see in Gateway. There's very little change to those forms. There might be some changes behind the scenes that you don't see, but Ryan will cover that in more details. Also, as I mentioned, the streamlining is going to continue. The DLGF is going to provide an estimate of the circuit breaker credits, and those are all based on projected tax rates from any new debt issues for units that have reestablished a cumulative fund or any anticipated levy appeals. Those are the excessive levy appeals that you may be familiar with. We're going to project those rates, the assessed values, and the estimate of the circuit breaker credits based on information that we receive on a pre-budget worksheet. This is the first year for the pre-budget worksheet. And what that pre-budget worksheet is a questionnaire that is in Gateway that collects data from you to help us revise and calculate the property tax cap estimate. This is going to take into account any excessive levy appeals that you anticipate, the cumulative funds that are reestablished, any changes in the adopting bodies or the fiscal bodies, new debt issues. New debt probably has more of an impact on the circuit breaker credits than anything else we have. The debt worksheets, information that's gathered with those debt worksheets, your estimated June 30th cash balance for debt funds. This is for counties. They have a mental health and a disability adjustment to their levies. And this was all due in Gateway by June 5th. So we have about 6 days before that's due. I checked this morning, and through yesterday, we still have 99 libraries that we have not received this free pre-budget worksheet. Try to say that real fast. Pre-budget worksheet. Now, how do you get to that pre-budget worksheet? It's in Gateway. Obviously, you're going to need your username and password to have access. If you need a new username and password, send the email to gateway@dlgf.in.gov, and they will be glad to provide one for you. Now, once you get into Gateway, you'll go to that select application and then just choose budgets. That's how you normally get into it when you're doing your budget. On the select unit page, you want to obviously choose your unit under the year 2018, and that pre-budget worksheet is found on the main menu. In fact, I believe it's the first option on the main menu. There it is. I have it circled here. This screenshot should look familiar to you. It's how you would be accessing your budget forms and reviewing those and submitting them. But it's the first option on there. So please complete that worksheet before the 5th. Now, one of the changes that first happened last year was a revision to the county council review. At the first meeting of your county council in August, the council is to review the estimated levy limits and circuit breaker credits and the impact that they have. The council may request a representative from your unit, from your library, to attend the meeting. If you do attend, you are allowed to make any comments to the council that you like on your proposed budget, levies, and your rates. One of the big changes that occurred last year is if they don't issue a recommendation of any kind, there's no penalty any longer. But after that meeting, the county council or the county fiscal body, they may prepare and distribute a written recommendation to all the units in the county. If they don't make that recommendation, the minutes of the meeting is going to be distributed by the county auditor. And again, if they fail on those counts, there is no penalty any longer. Remember, in the past, if you didn't submit your budget to the county, or if the county didn't comply with theirs, they were jeopardizing any increases to their budget. The budget could have been frozen, and their levy could have been frozen. Well, that's gone now. You still have to submit. Libraries have to submit their budgets to that elected fiscal body for the binding review if your proposed budget is requested to increase more than the previous year's budget plus the average growth quotient. Now, we don't have the average growth quotient for next year yet. It's due out at the end of June. So normally it's available about the middle of June. But last year's it was 3.8%, so it's probably going to be somewhere in that range again. Remember, the increase is based on the budget, not your levy. So the budget is defined as the total of your appropriations for all of your funds that are included in the budget order. If you need to get to your budget order, if you don't have a copy of it, it's on our website. And it's there for probably back to 2006. So you can go back and get quite a bit of historical information if you require it. But what we'll be basing the calculation on is your 2017 budget plus the growth quotient. And it's going to be using all those budgets of all your funds from the budget order. Now, if your budget for 2018 does not exceed the 2017 budget plus that growth quotient, you don't need to go to the fiscal body. The requirement for that non-binding recommendation, now remember, this is the non-binding, that's been repealed. And again, that threshold, that applies to the budget, not to the levy. The tax levies are controlled by the maximum levy, and we enforce that calculation. If you don't remember how the max levy is calculated, it's basically last year's maximum levy plus the average growth quotient that we're going to be calculating and distributing in the middle of June. But one of the next things that you're going to be involved with after you submit your pre-budget worksheet is your budget workshop. Now, don't confuse that with what we're doing today. This budget workshop is a one-on-one session that you can have scheduled with your budget field representative. And these are done throughout the state by county. It's where the field representative will go into a county, schedule these meetings in 35 to 45-minute intervals. And you go in and you can exchange information with your field rep. You can ask them questions. They will give you some assistance as far as navigating Gateway or completing the forms. In fact, if you go to the workshop, 70%, 75% of your work will be done at the workshop if you go there with all the information that they need. So it's really to your advantage to go to those workshops. It really works out. It saves a lot of problems, a lot of phone calls, and a lot of follow-up throughout the budget cycle just to attend the workshop. When you go to your workshop, there's some information you need to take along with you. One is your June 30th closing reports that show your cash and investment balances. You want to take your completed budget form 1. Remember, that's your appropriations for each fund at the line item. So you want to complete those and take those to the budget workshop. If you're anticipating an excessive levy appeal, you want to take those forms with you to that workshop.
There is a question about when will those workshops with our field representatives be held?
Those workshops are going to be scheduled starting in the middle of February through the middle of August. They can't start until the end of the June 30th first half closing. You've got to have your June 30th closing so we can get those June 30th cash and investment balances. We also need to know your spending for the first half, your encumbrances for the first half, and all those other obligations so that we can work on projecting everything through the second half and then start looking at the 2018. Some of these workshops may be scheduled a little earlier. I know I said the middle of July. We can't really start until after the June 30th. Some of them may be a little earlier. It's going to depend on when the information is available. But you're going to be contacted by your field representative as to when it's scheduled, and you're going to be receiving some notification.
But it's definitely not in February. That'd be way too early, right?
February would be way too early. And February is when we're doing the certification of the budget for that year.
Okay, that might have been where the clarification was needed, where you get the certification in February.
Correct. Something else that you need to take to these budget workshops with your field representative are proposed and confirmed dates for your public hearing and your adoption meetings, because those are all included on that Form 3 when it gets posted on Gateway, and that's your notice to the taxpayers. You're going to need your copies of your first 6 months additional appropriations, if you have any. The resolution approving any encumbrances that were carried over from 2016, I'm sorry. You definitely want to complete your debt service worksheet and amortization schedule. All that information is critical for calculating these budgets. If you have a temporary loan, you'll need all of that information with you. Copies of your Form 22s from the county auditor. The Form 22 is your certificate of the tax distribution, which shows you how much was distributed for each fund. Some of those you'll receive them a little bit after June 30th because of the timing of the distribution and the allocation of the taxes. Your circuit breaker reallocation, if that's applicable. If you have any home rule funds, this is primarily for cities and towns, but if you have any home rule funds that you post in Gateway for your annual budget, you want to include those along with the fund number and the name for each of those funds. If there's any change to your jurisdiction, which may have been impacted by annexations, that information we're going to need to know, because that will have an effect on your assessed value. It also involves a change in the taxing units or the taxing districts that are affecting your assessed value. And any other information that you have that's going to be relevant to your budget or even Gateway. You do want to check the contact information that we have listed for your unit, and you want to make sure that we have at least an additional name, one additional name to include on those contacts. And by that, we need your name, address, telephone number, email address, especially the email address, and for the backup so that we can reach you if we need you. Now, what to expect at your budget worksheet. Hopefully with a successful budget worksheet, you're going to come out of there with a completed budget form 2. That's your miscellaneous revenues. All that information will be filled out. Your budget form 3 will be completed. That's your notice to taxpayers. The budget form 4B, that's that financial statement. We also call it the 16-line statement. That should be completed or nearing completion when we leave the budget workshop. You should be coming out with a current year financial worksheet, which is your line 2 estimate, and your debt worksheet. That should all be completed by the time we get finished with the budget worksheet. And as you know, the Form 4B, that's almost the end of the cycle. At that point, you're waiting for your budget to be adopted. So a lot of this work's going to be done at the worksheet. Now, if they're not completed prior to the worksheet, or at least the Form 2, 3, and 4B, provide that information to your field representative at the workshop so that they can complete those forms for you. Also at the workshop, after that data is entered into that budget workshop program, they'll be able to print some forms for you that were uploaded into Gateway. The field representative can upload the data. Let me explain one thing. When you're at your budget workshop, your field rep is entering this information into a program. It's not being entered into Gateway. We entered into that program, and then at a later date, that information is then uploaded into Gateway. So that's how that information gets transferred from our field representative to the Gateway. Now, it's going to be stored as your proposed budget, and it's also going to include your proposed rates, proposed levies, and the assessed value that we have at that time. That upload can only be done if it's approved by you or by your unit. So you have to authorize that. After the data is uploaded into Gateway, you can still change it. If the changes are made, you're going to have to complete some other forms. You're going to have to go through and possibly make adjustments to your Form 1 or the other budget forms. At that point, you'll need to contact your field representative just to make sure that you get the correct guidance on what's going to have to be changed. While you're at your budget workshop, you're going to be receiving some instructions from your field representative about submitting that budget form 3. Now remember, after it's submitted, if you need to make some changes, it can still be done. And by changes, what I'm referring to here primarily is if there's a change in one of those dates. One of the things that we frequently encounter is where the dates of one of those meetings get changed. For example, at your public hearing, if you don't have a quorum, well, at that point, you're going to have to reschedule it. Thankfully, you don't have to re-advertise in a paper. What you do need to do is go back in and change it properly and timely in Gateway so that the taxpayers do have the opportunity to be informed. But all of those forms, they should be thoroughly checked before you post it online, just to make sure that all the calculations are correct and there's no typographical errors. One thing about that notice, this is the Form 3, it does not include the tax rates. So what you're concerned about there are primarily the levies. But because you can always fix the appropriations in the following year if you have to. It's great if you can fix it now, if there's something that needs to be adjusted, but that can always be handled with an appropriation, an additional appropriation in the following year. But the levy, once it's posted, it's almost like chiseling it in stone. Remember that notice must be posted on Gateway at least 10 days before the scheduled public hearing on your budget. That leads us right to the budget calendar. And as I mentioned when I started, the budget calendar, I know gets redundant because you hear it over and over and over again, but it's critically important. Probably 95% of the dates that are on here are statutory. And a violation of some of these dates could jeopardize the approval of your budget or even your levy. So it's imperative that this is followed. I've already discussed June 30th. It's actually the end of the first half of your budget year. Remember, we're on a calendar year. Your budget is a calendar year. June 30th is a big date. It's the end of that first half. That's also when you have your first half property tax distribution. So you know you're going to be able to forecast approximately how much property tax you're going to receive for the year. Early July is the beginning of the budget workshops. July 14th is when the DLGF is going to provide you with an estimated maximum levy. Remember, it's estimated because we're not going to have all of the data to give you your maximum levy really until your budget is adopted, and we have a lot of other miscellaneous numbers that are out there that aren't really known until you adopt your budget and all the other units in your county adopt their budgets. So when you get your 1782, that's when we have really nailed down your maximum levy. July 31st, that's when the DLGF provides you an estimate of your circuit breaker credits. And that's going to be based a lot on that worksheet, that pre-budget worksheet that you're going to be completing, and all the other units in your taxing districts have completed. A lot of that circuit breaker credit is going to depend on what your schools are doing, or if you have a city or a town, what they're doing. Obviously, your county government's going to have an impact. All of those units combined impact that circuit breaker credit. What you do with your budget impacts the circuit breaker credit. August 1st is a statutory deadline when the auditor certifies a certified net assessed value, but now they certify it to the DLGF. Then we enter that information into Gateway, and that's when the units can have access to the number. So I mentioned before, mid-August is the end of the budget workshops. Now we'll be having, time permitting, a few additional workshops available for units that possibly missed their scheduled workshop for emergencies or for a variety of reasons. But those are, don't rely on that because it's subject to available time. And at that point in time, the time of our field representatives is really becoming a critical issue. September 1st is the last day for units with an appointed board to submit budgets to the fiscal body for their recommendation. If you as a library are going to propose increasing your budget by more than that increase, more than the average growth quotient, September 1 is the last day for you to submit your budget to the county council. And remember, this is the last possible date. Don't wait that long, because if you do, if there's an issue, it can't be fixed. October 12th is another statutory date. It's the last date to post the notice to taxpayers of the budget public hearing on Gateway. And again, it's at least 10 days before the hearing. Again, the October 12th is the last possible date to post that notice to taxpayers on Gateway. October 19th is the last possible day to file an excessive levy appeal. We don't get many excessive levy appeals these days because The General Assembly about 2 years ago took it down from 15 to about 5 categories where you could file. And only a few of those actually apply to a library. October 22nd is the last possible date for your public hearing. And that must be at least 10 days before the adoption meeting. Remember your public hearing? The public notice must be at least 10 days before the public hearing, and then your public hearing must be at least 10 days before the adoption meeting. So what you should do is plan your adoption meeting and then count 10 days before that, and that's the last possible day to have your public hearing. 10 days before that is the last possible day to post online the notice for the public hearing. October 30th is the last possible day 10 or more taxpayers may object to the budget, tax rates, or tax levies. No later than 7 days after the public hearing. And the reason that's 7 days and there's 10 days in between, that's to give the unit 3 days to make their response, and for the fiscal body to include that in their adopting resolution.
Dan,
Yes.
are those 10 days business days?
Those are 10 calendar days. They are not 10 business days. It's 10 calendar days. Another last possible date is November 1st. That's the last possible date the fiscal body can adopt the budget, the rates and the levies. The last possible date. November 3rd is the last date for all of the units to submit the adopted budget, rates, and levies to the DLGF through Gateway. It's actually 2 days after the adoption. You're to have the budget submitted through Gateway, adjusted to reflect what the fiscal body has adopted within 2 days, and then submitted to the DLGF. December 14th is not a statutory date, but it's our deadline because the DLGF has 15 days to respond to any additional appropriation. We need to have all additional appropriations for 2017 completed in 2017. If you have an additional appropriation, you need to have it posted by the end of 2017 in order for it to keep your budget proper. But so the last date for us to receive an additional appropriation is December 14th. January 31st, this is a deadline for you to file your annual salary report with the State Board of Accounts. And February 15th is the last date for the DLGF to certify the budgets, the rates, and the levies. That's the budget order. Hopefully you'll be getting that. Some of you may have it before New Year's. In past years, we've had some of those done, many of those done by the middle of December. It all depends on the timing and how closely we can get into this calendar and how all the pieces fit together. Now I've got a few points about legislation. And again, as I mentioned before, not a lot of this information about legislation impacts libraries, but a few of the things do. I just want to make sure that you're aware of it. A couple of the larger bills were focused on transportation funding, and then there were a couple of other things, but everything just seemed to be tied around it in a couple of other things. But most of it, thankfully, they left libraries alone. One thing, House Enrolled Act 1009, effective July 1st of 2017, a county or a municipality, now municipality is defined as a city or a town, they cannot issue bonds unless they filed their annual report with the state examiner. That's the Board of Accounts for the preceding year. So that's new. House Enrolled Act 1031 specifies the requirements for corrective action when an audited entity fails to comply with certain guidelines. That's probably going to be covered by Board of Accounts. House Enrolled Act 1043. This is a complicated bill, and it has to do with the definition of a controlled project. A controlled project is usually a bond issue or a project that exceeds $2 million that you're going to finance with a bond. And that determines when you have to go to a referendum or not. I want to just point out that there's a change in that definition of a controlled project so that if it puts an escalator clause in that assessed value limit going forward. If you're going to issue bonds, you're going to have a bond counsel. They're going to make sure that you comply with this. Also in 1043, it's going to require at least 2 public hearings on a preliminary determination before the adopting resolution or ordinance for debt. The unit must allow the public to testify, and the unit must provide at the public hearings. What this boils down to is the estimated impact on the taxpayer. It's the current and projected annual debt service payments divided by the net assessed value. That's the tax rate. They're wanting at that public hearing an illustration of the property tax rate and what the impact is going to be. When a bond referendum is defeated, the unit may not submit another referendum to voters any earlier than 700 days after the date of the publication, or after the public question. Or if you can get a petition approved, according to the requirements of this statute, and I believe that's 20% of the voters. If they sign that petition authorizing you to do it, you could get it within 350 days. There was an adjustment to the school operating referendums where they can go for 8 years rather than 7. This could impact the library. It's House Enrolled Act 1272. And it's effective July 1st, 2017. If a unit submits a notice to a newspaper in a timely manner and the newspaper fails to publish the notice, but you have placed the notice in 3 prominent places within your library district, or post the notice on your political subdivision's website, and that's an easily accessible and identifiable website, that notice is sufficient. The publication in the newspaper is not required. In other words, for the newspaper to fail to publish your public notice, that is not going to affect the approval. $13.50. This is primarily for counties, cities, and towns. And I made just a brief note. It makes various changes to the gaming revenues. In short, basically what this is saying is that the gaming revenues are going to fall. There's more competition with the casinos that we have in Indiana. Ohio now allows casinos. Illinois now has casinos. And it's cutting into the business of the larger casinos in Indiana, and revenues are falling. So it's reducing the taxes and the requirements on the casinos. So the distribution to local governments is going to fall. We don't know how much yet, but it is going to change. This is just a warning to let you know that this flag needs to be out there. 1450, House Enrolled Act 1450 is primarily a property tax bill. This section 1, you've probably heard this for the last 2 years, but it applies to contracts, and it requires you to upload those contracts into Gateway. And if the total cost of the contract exceeds $50,000, I'm sure I said that last year, that this was required, and that the Gateway wasn't ready yet, but it was going to be ready soon. Well, I'm going to tell you right now, Gateway is not ready to accept these contracts, but it will be ready soon. Also in 1450, it provides that both the executive of political subdivision and a majority of the members of the fiscal body may independently request technical assistance from the Distressed Unit Appeals Board in helping that unit avoid becoming a Distressed Unit Appeals Board. There are only 3 units that I know of that actually go before the Distressed Unit Appeals Board. And what that is it gets them some special exemptions from circuit breaker credits, and it might get them a little bit other treatment. But it's to stave off bankruptcy. We have very few units in Indiana that are in this type of a situation, this type of a fiscal situation. And hopefully it stays a very rare event. 1450 also allows the county treasurer and the county auditor to implement a policy that they can waive the property tax penalties on a property, but the county has to approve the policy. 1450 provides that the executive of a township can use money in a rainy day fund for fire. And it removes the requirement for a township firefighting fund to be the exclusive fund. What that meant, if you're a township, is everything for fire had to be paid from your firefighting fund or your fire cumulative fund. You couldn't use it, rainy day fund for it. This eliminates that restriction. The next one has to do with the fire territory. I don't see how that could have anything to do with the library. And this next one is also dealing with the fire territory. Senate Bill 386, and that was the only Senate bill that I made a note of. It provides that the last day for a county assessor to provide assessed values to the county auditor is July 1st rather than June 1st. So the assessors now have another 30 days to certify the assessed values. County auditors, however, are still caught at the August 1st. There's good reason for the August 1st because that's about as late as we can get and still expect to have budgets done by December 31st, which is going to be our requirement beginning next year. That's not for the 2018. For 2018, we still have until February 15th to get it certified. But for the 2019, we have to have them done by December 31st. They start moving this certified assessed value date around. That's going to make that a bit more challenging. So now the assessors have another 30 days to complete their work. County auditor does not. Got a couple of updates for you. We have a new additional appropriation mailbox. If you have an additional appropriation, here is where you can email the certified form that we require, and it's basically additional appropriation requests at dlgf.in.gov. If you can remember at dlgf.in.gov, you can reach anybody in the DLGF. You just know what the prefix is. There are minor changes to that additional appropriation form. None of the mechanics of that form has been changed, but I do want to tell you that we need you to include the date of the advertisements. Those are the public notices of the public hearing. We do need that. We need the date of the public hearing on the form, and we need the date of the approval by the fiscal body. So please include those dates. You'll include a revised form too. That's your miscellaneous revenues. We only need that if you're changing your estimate of the second half, or if you're changing your estimate of your miscellaneous revenues. And you need your fiscal officer, I assume that's you, they must sign the form. A couple of other reminders. Please verify that all the required reports that you're required to have filed have been filed in Gateway. That's your annual report, your salary report, and so forth. Your debt service amortization schedules, please verify that those are in Gateway and they are correct. If you have a debt issue, that must also be in Gateway's debt management system. And it must be in there before we can approve an additional appropriation or an appropriation or even a tax levy for that debt issue. And also, please check Gateway to make sure that the proper officials are showing up correctly. Contacting officials, there's again, for uploading your pre-budget workshop, Gateway at dlgf.in.gov. And also use that email address for any questions, any gateway questions, or if you need your password reset, or if you need a new user assigned. If you need to submit additional appropriations, we just talked about the additional appropriation request. Excessive levy appeal questions, you can send those to either Fred or myself. I'm at djones@dlgf.in.gov. Budget questions, you can also send those to your field representative. And here's a list. You can find a list of your field representatives and a map at this email address. And that's the DLGF homepage. And here's my contact information, as well as Fred's, and our main number and our homepage number. That's all I have information that I have to share with you today. I know it's quick, it's a lot of information, but it's just a kind of a kickoff to the budget season, get everybody thinking about levies, rates, exciting stuff. But it is that time of year. Ryan's going to pick it up and go through the changes to Gateway, or just refreshers and reminders about everything you need to know or wanted to know about Gateway and how it's going to impact your budget for next year. So that'll be our next part.
Thank you, Dan. We're going to take a 10-minute break and then come back and start at about 11:25 with Ryan Burke's presentation. For those of you, I do want to make a comment about having trouble with your sound out there, and those in the room here too. These presentations will be archived and available through our training webinars, archived training webinars as YouTube videos. It just takes a little time because we have to close caption them, and then you'll be able to listen to them at another time if you're having trouble with sound today. All right, let's take 10. Seven people on in the webinar, and we have more than 33 here in the room. It's nice and cozy here today. All right, we're going to start again. This next presentation is also from the Department of Local Government Finance, and it's by a field representative, Ryan Burke.
Thank you. Well, my name is Ryan Burke, and I'm a field rep with the DLGF, and I started out just a month or so prior to Gateway launching back in 2011, and back then I was a project coordinator. So I've seen Gateway each and every year. Every year it gets better and better. This year is no exception. There's not a lot of changes, but there are a couple which I'll definitely review in pretty good detail. And then there's also the biggest change last year was the introduction of circuit breaker, which a couple years ago I really knew nothing about, and last year I knew slightly more, and I learned quite a bit that year. So I'm going to give this presentation as if you guys don't know much about circuit breaker at all, because I know there's probably new officials in the audience, or there's people like I was last year that really had no idea. So I did a lot of homework, and I'm going to share what I've learned. So we're going to start off with reviewing the budget process, then take a look at the updates to Gateway for 2018, and then the bulk of this will be a review of the budget forms themselves. Now, one thing to note is I did not know about this presentation until late last week, so there will be a couple of slides that are pretty similar, but I'll try to just scoot through those pretty quickly. So let's first talk about the budget process. The very first step would be preparing your budget, and reviewing the budget calendar really helps with that. So a little secret that we found out late last week is that the budget forms are actually live right now. So you can actually go in there and start completing your Form 1, which is essentially your very first step to beginning your budget. Once you have your Form 1 prepared, which you may want to wait till that growth quotient to finalize everything, But once you do have your Form 1 mostly done, the biggest step after that would be attending your budget workshops. It's a huge help, especially for libraries. And if there's any way at all you can attend, please come. We love seeing you there. We can help answer any questions that you have, and we can typically do quite a bit for you as well. And for me, that's just job security. And I enjoy my job. So once you do attend your budget workshop, the next thing to do would be advertise your notice to taxpayers. You can advertise it in the newspaper if you want to, but the only thing we'll check to see is that it is submitted online through Gateway. That's your Form 3, at least 10 days before your public hearing. Now, the notice to taxpayers lets the taxpayers know when and where your public and adoption meetings are, along with your budgets and levies by fund. Now, once you get the advertised, you need to hold your public hearing. Easy enough. Then the county is going to do a non-binding fiscal recommendation, assuming that you are going through non-binding review and adopting your own budgets. With that process, it did change last year. You no longer need to submit the county council review worksheet. So if you're non-binding, there's nothing that you essentially have to do for that non-binding review. They only review DLGF estimates. Now, at least 10 days after your public hearing, you would hold your adoption meeting. Just make sure you hold that adoption meeting when you told the taxpayers you would on your Form 3. Easy enough. Now, once you do actually do your adoption, you would have 2 days to get everything submitted in Gateway. It's not too bad. It's mostly just submitting the forms and then also scanning and uploading your signed Form 4, your resolution that you use to adopt your budget levies and rates. This year, we have until February 15th to certify the budget levies and tax rates through the budget orders. Now, next year, in most cases, that we move up 6 weeks to December 31st. So, same amount of work, six less weeks, but we'll get through it, and we'll get through it. Let's just say that. So let's first talk about budget workshops. Dan reviewed a lot of this, and I'm going to touch on a couple of points, but mostly just go through this pretty quickly. So you meet one-on-one with your field rep. I have 8 different counties. I'm sure I'll see some of you. If not, I mean, we have 11 other field reps, and you're in good hands with all of them. You really are. If you ever have any questions at all, please let them know. It's a lot easier to ask questions beforehand than not ask them and maybe make a mistake. So what we'll do is we'll work through several of your different budget forms, help ensure timely public and adoption meetings, and answer any budget questions that you have. Most non-school units, all libraries, have the capability to get a lot of your budget forms uploaded for you. So anything you can do to make your job easier, please take advantage of it. That's what we're here for. Now, what to bring, Dan covered this pretty well, but a financial report or ledger that has your first 6 months expenditures totaled by fund, a list of any encumbrances if you have any, a listing by fund for your June 30th cash balances, including any investments, and you currently have your 2017 budget. There are things you can do to increase that, additional appropriation, or reduce it, an appropriation reduction. And if you've done either of those two things in the first 6 months, just bring some documentation, let us know. Or if you plan on increasing or decreasing your budget in the last 6 months, just let us know. Last on this page is we ask that you provide a completed and totaled Form 1 for each fund. Now, we don't necessarily have to see that if something happens. We just need the fund total budgets for 2018. Next, we do ask for you to bring a completed Form 2. These are your revenue estimates for everything besides property taxes. Now, there are some revenues that we will have estimates for. Those are typically excise, CVET, and FIT. Those revenues that come on the Form 22s. But for those more local revenues, maybe fines, fees, things of that nature, we likely won't have any estimates. So please provide revenue estimates for those more local revenues. If you do have any debt, please provide any amortization schedules. So that way we can help ensure that we have a high enough budget and property tax levy to help you make your debt service payments. Lastly, we ask that you bring your confirmed public and adoption meeting dates, times, and locations. Do we have any questions so far? All right, great. That must mean I'm doing a good job, I hope. All right, now let's talk about the actual updates to Gateway. So this very first part, still under development, that applied early last week, but not anymore. The forms are live. I'm sure they're still changing a couple things, but essentially these have been done. So effective January 1st, 2017, they've gone away with the county-specific income taxes. So there used to be CAGIT, COIT or COIT, and a few others. All those have been combined into local income tax or LIT. For an example, for a CAGIT county, you used to have property tax replacement credits, then separately you would have certified shares. Now it all gets combined to LIT certified shares. So essentially it's just on the Form 22, your two revenues have now become one. It's a name change. Now on your Form 4B, line 13A, that was property tax replacement credit. That doesn't apply anymore because now it's just simply a revenue on Form 2. So to prevent people from making a mistake, we just removed data entry for that field. Now, a pretty small change, but pretty useful, is the 1782 notice recipients form. It's at the very, very bottom of the budget form menu, and its sole purpose is to provide us with a mailing list to send the 1782 notice out. Now, what is a 1782 notice? I'm sure most of you know, but a couple may not. What we do is we work your budgets after you submit them, and then we'll send out a 1782 notice. This says, this is your budget, levies, and rates. Please let us know within 10 days if you want any changes. So that notice will be sent out to every email address on this form. Every year you had to re-enter those people and their email addresses year after year. Now what we've done is we've rolled over those contacts from last year. So please be sure to review them, make sure anybody that's left has been deleted, review the spelling on the email addresses because it's just a computer program. Anything that's in there is what it will be sent to. Now another thing is sometimes those do get sent out while people are on vacation or they're sick, so try to add multiple people there. And also, probably a good idea is you might even want to add a personal email address. It's pretty rare, but even when it happens just twice a year or 3 times a year, you hear about it. So you may want to add a personal email address as well, because sometimes things get stuck in spam or junk folders. But pretty much the more email addresses you have on there, a couple, the better your chances are of receiving the 1782 notice, despite being on vacation or being sick, and then still allowing you that full 10 days to respond.
I have a question about the local income tax. Is it, besides CAGIT and COIT, is it also the CVET and things like that?
No, it's not CVET, excise, or FIT. Those are other taxes, but it's only the county option income taxes that have changed. But CVET, excise, FIT are all still separate. It's a good question, though.
Can I ask a question about that, too?
Absolutely.
So I've been trying to keep on top of that meeting of the LIT board in my county, Madison County. To my knowledge, they have not met, and my understanding is they have until June 30th to make a decision on the distribution between certified shares, economic development, and public safety. If they don't meet, what happens?
I'm going to see if Dan knows the answer to that question.
Well, let me repeat the question. The question was about in Madison County where they meet regarding the certified shares and the local income taxes. If they don't meet by June 30th, is that it? What happens?
This was a change to the income tax statute last year. My understanding is if that body does not meet to make a change, that the allocation in place remains.
Okay, thank you. That's what I was hoping.
Thank you, Dan.
I didn't listen to the answer.
So pretty much if the board does not meet by June 30th, which is the deadline, then there essentially is no change to the current allocation. And
Thank you.
I give all the credit to Dan. Now, another update would be we have the error prevention report. So Gateway's great and awesome. It's designed where you enter information once and carry information through the rest of the forms by clicking a button, which is great until you realize you made a mistake, because now you have different places where you need to correct it, which can be difficult to track. So we have the error prevention report at the top of the budget form menu where you select between your forms. And you can click there, and that'll tell you, okay, here's the error. Your cash balance here does not match your cash balance here. Same with your budgets and whatnot. So that's what it's always done before. What it will do once we've got this finalized is it will tell you, here's the error, and here's what you can do to fix it as well. So it's giving you a little bit more help.
All right, we have a couple more questions. In particular, it's in Elkhart County. I'm not quite sure whether we can answer the questions, but Elkhart County is still sending the library PTRC and certified shares not lit. Is this correct?
All right, Dan, listen to my answer, see if you agree, but essentially Elkhart County is still sending PTRC and certified shares, not lit certified shares. So I believe that statewide it's kind of officially known as lit certified shares. They have been combined. It's possible that the county may not have combined it yet, but essentially those two are just one revenue. Dan, do you agree?
I believe that's true, unless there's something in the statute specific for Elkhart County. We'd have to review that.
Okay.
And I don't know if this is a rhetorical question, but so the lit board can reallocate lit shares so that the public library gets a smaller share than in the past. I suppose that everybody has a different experience of that, and I don't think we can answer that question.
On that question, have them email me and I'll get them a response.
All right, very good. So you can email Dan Jones, which is djones@dlgf.in.gov, your question regarding your local unit and how lit is being handled.
Thank you, Dan. So another thing that we're updating is our user guides. Now, let's say you're working on a budget form Saturday morning. First off, I'm really, really sorry you're working on the weekend, but there is still help. So at the very, very top of Gateway, there's a green bar. It says Home, About, Account Settings, and User Guides. Sure enough, if you click on User Guides, you'll see a list of user guides for each and every form, which is great until you really look at them. You'll see that they're from a couple years ago, and I think a couple things have changed since then. So we are currently working on updating those user guides for Pay 2018, and those should be posted shortly. Now, we are doing additional safeguards to the budget forms. So unfortunately, this has happened before, but people have submitted their notice to taxpayers or print off and adopted their signed Form 4 with all 0 budget levies and rates, which I can't think of a single person that would want that. So we'll now have safeguards to prevent that from happening. Next, we have an invitation to submit the Gateway survey that will be emailed after submitting all of your budget forms. Sometimes the timing of that survey hasn't been the best. Sometimes it's been quite a while afterwards. But now, once you submit your budget forms, you'll get a Gateway survey, or at least invitation to take it. Now, I would highly advise you to take the survey. Like I said, Gateway's come a very, very long way in the past. This is its 7th year. Every year it gets better. And I contribute most of that improvements to survey or other feedback we've gotten from the local officials such as yourself. So please take the time, just a couple minutes, to do the survey and let us know. Some of those are, how well are we doing with this and this? How are the trainings? And of course, there's an open-ended question where you can just provide any comments or suggestions that you have. That's where we probably get the best feedback that we get each and every year. And the last two on here are, we are revising our cert breaker property tax cap estimates throughout the presentation. I may say property tax caps, I may say cert breaker. It's the same thing. Last year was the first year we were charged with providing circuit breaker estimates, and we didn't have much time to do so. So there were definitely a few assumptions that were made that resulted in, let's just say that this year's circuit breaker estimates will be better. And it's primarily driven by this next bullet point, the pre-budget worksheet. So this will collect debt and other information. Dan definitely talked about this in some pretty good detail, and it's due by June 5th. And we still have, I think, probably half the state that still needs to submit it. If you do have any trouble with that, just contact us. You can contact Gateway Support. You can contact your field rep, whomever, and we're definitely happy to help. But by submitting this pre-budget worksheet by June 5th, that'll help us get you better cert breaker information by July 31st. Now let's look at the pre-budget worksheet itself. This slide's verbatim as Dan spoke about, but we did take a 10-minute break, and it's been a little while, so let me just review it pretty quickly. Excess levy appeals, pretty rare. Keep fund reestablishments, almost non-existent for libraries. Now, it will ask about your adopting your fiscal body. Essentially, are you going to adopt your own budget, or are you going to be a binding review? So in most cases for libraries, it's based off, are you going to exceed the growth quotient growth with your budget? It'll also ask if you're going to incur any new debt repaid with property taxes. And if you do have debt or you anticipate new debt, it'll ask you to complete a debt worksheet. Lastly, for libraries, it'll ask you to provide an estimate of your June 30th cash balance for your debt service funds. If you don't know how to do that, reach out to your field rep. We'll help you calculate that for you. Now, one thing to keep in mind is, let's say you state that you are going to have no new debt. This does not lock you into anything that you submit here. It's simply additional information for us to help us revise the circuit breaker estimates. None of this is binding. This does not lock you into anything at all. Now let's talk about property tax caps or circuit breaker. So I truly knew very, very, very little about this, especially 2 years ago. Thanks to changes in statute, I know quite a bit more. So I'm going to share that with you. So as far as property in Indiana, typically property taxes are capped at 1% for homesteads. So it's a house that you live in. 2% for non-homestead residential and farmland, and 3% for commercial of their assessed value. So, and a simplified example is there's a $100,000 home. It's capped at 1%. That taxpayer typically won't pay more than $1,000. Now, there's some circumstances across the state where, let's say, factories move out or the assessed value or taxing base has just kind of gone. It no longer supports that large taxing power that you used to have. So as a result, that homeowner that used to be charged 1%, they're now trying to charge that person 4 or 5%. Now, due to statute, they're only going to pay that 1%. So as a result of that, the county treasurer collects less property taxes. Instead of collecting $4,000 from this person, they're collecting $1,000. And the county treasurer collects less, which means the libraries collect less as well. All the other units do. So next 2 slides or bullet points say exactly that. Typically, if the taxpayer is about to be billed higher than their cap liability, bills reduced to the cap, and the county collects less, so the libraries receive less. So this is something that it varies across the state. Some libraries may not be hit with this hardly at all, while other libraries are hit pretty hard. I can think of a couple examples, but keep this to myself. So in the past, unfunded budgets may have actually been certified because of property tax cap losses weren't accounted for. This occurred because the certified levy, which we count as a revenue to fund your budget, was higher than what would actually be received. Now in 2016, Senate Enrolled Act 321 changed statute to require us to include property tax caps in the budgeting process. So do you have any questions so far?
I do.
Okay. Yeah.
Can you easily, okay, I understand, but can you easily explain how the distribution then, or the lack of distribution, is calculated among the taxing units?
Gotcha. So the question was, can you explain how the distribution or lack of distribution is spread across the taxing units? With this, I'm going to think about a little bit. And Dan, listen to the answer, see if you agree. But I think primarily it's based off the taxing district itself and how the levies and rates are allocated based off that taxing district. Now, Dan, do you agree with that answer?
Yeah, it's allocated by proportion of your tax rate to the total.
All right, so it's allocated as to a proportion of the tax rate as the total, as Dan
It's
said.
just an operating, because debt is a guaranteed fund, so is debt calculated in part of that as well, or no?
So debt. So the question was, is debt a part of that calculation? And I believe it is, but remember that debt only receives that over 65 credit. So you have 1%, 2%, 3%. Then the other part I have not talked about is the credit for homeowners that are over the age of 65.
Yeah, the property tax is allocated to the debt funds first.
So the property taxes are allocated to the debt funds first, and then the remainder of the funds, which for libraries are typically just the general fund, receive the bulk of the circuit breaker losses. Thank you for your question. All right, so what exactly are property tax caps? So to account for the property tax caps, as statute now requires us to do, tax units now include the estimated circuit breaker by fund in their budgets. So for libraries, you have your general fund, your debt service fund, and I think there's only one library across the whole state that has another fund with a levy. And I just won't talk about that one specific case, just make things simpler. But essentially, for other units, they have many different funds with levies. With libraries, it's pretty simplified. You have your debt service funds that has the over 65 circuit breaker losses, and the general fund with the bulk or remainder of the circuit breaker losses. So it's essentially, we'll issue our estimates by July 15th or 14th, and there won't be any needing to divide it between certain funds. That'll be your estimate for that fund, and I'll review that in more detail later on. But that estimate gets included in your overall budget for the general fund. So you're going to spend $100,000. Your circuit breaker loss is $5,000. The budget that you have in your Form 1 itself is $105,000, which sounds pretty confusing, and it is. But you're in good hands with me. I will walk you through it in the next few slides. So what they've done is we've increased your overall budget, or more so we've accounted for it in your Form 1 and throughout the budget forms as well. This results in more accurate operating balance, which is line 11 of the Form 4B. Now, this is another line in a pretty big Form 4B 16-line statement that honestly has quite a bit more than 16 lines. So it's easy to get lost, but it's really, really important. So let me first review what an operating balance is. So again, it's line 11 of the Form 4B. And essentially what it is assuming all the estimates are correct, that's your estimated cash balance once the budget year has ended. So thinking of the general fund, the largest revenue for that is probably property taxes. That's what you primarily operate off of. So this operating balance is used by unit to operate off of for the first 6 months after the budget year until you get your June settlement. So not all libraries can do this, but it's pretty important to maintain an operating balance so that way you can operate for this first 6 months. So in this case, that would be the first 6 months of 2019 until the June settlement comes in. If this amount is ever negative, a budget reduction is likely. I'm going to take one quick tangent because I've talked to a couple of my libraries and they've came into this issue, which is unfortunate, but libraries are held to a maximum budget that they can have and still be able to adopt their own budgets. So, I mean, across the state, wherever you are, there's turnover. So some libraries think, okay, there's this maximum budget that we can have. Let's just budget that. And that's totally fine. You definitely can. But you have your budget and what you actually spend. So these couple libraries that I've spoken to personally, they've had turnover and what they've always budgeted and what they've spent was that budget. Now, the drawback of that is if you ever budget or actually spend more than you've taken in revenues, we will allow you to do that to the point where it gets to be until you essentially have no money left over. So anytime you spend more money than you bring in revenues, you're driving that cash balance lower and lower and lower all the way to zero. And that's when you kind of hit some really, really bad problems. So DLGF, I mean, it's all local decisions. If your budget's funded and you go through the proper procedures, we're going to allow that budget. But one thing that may be good is just to compare your revenues to your expenditures to see if your budget is fundable more for the long term. Now, sorry for that tangent, pretty important, but back to property tax caps or circuit breakers. Do you have any questions so far?
No.
Okay. So let's summarize all this property tax cap or circuit breaker information I've talked about so far. So it's the portion of the certified levy that the unit may not receive due to property tax caps. Now the budget's on the more internal budget forms. Forms 1, 4A, and 4B will be increased by the property tax cap credit. So it's higher than you're actually budgeting to spend. Now the budget's on the more public forms, which are Form 3, Notice to Taxpayers, and Form 4, your adoption resolution, will be the actual budget you anticipate spending. So remember, it's more kind of increasing your budget on Forms 1, 4A, and 4B is more of a tool to get you to a realistic operating balance. Now you will manually enter the circuit breaker amount in the designated portion of Form 1, which I'll review later, and Gateway will help make sure that the correct amounts get pulled over automatically for you into the other forms. So you'll still need to click the buttons, but as far as adding or subtracting, it'll do that portion of the calculation for you. Now, if you're confused, I'm definitely with you. It is confusing, but we will explain this in more detail later on.
I have a question.
Yeah.
Is this the same process that was used in 216 that we're using in the 217?
Okay. So the question was, and I think this is the question, definitely tell me if it's not, but is this process for Pay 2018 the same that we used last year for Pay 2017? And yes, it is. The only real difference is that we now have the pre-budget worksheet, and hopefully our cert breaker calculation should be more accurate. Now let's review some of the important dates. Dan's talked about these in pretty good detail. The only other one is, he definitely touched on, but more applies to me and field reps, is that we are planning to start our budget workshops by July 17th. Now, lastly, February 15th is the last day for us to certify budget orders, and this will be moving up to December 31st in most cases for next year, Pay 2019. Now, July 14th is when we're going to issue our max levy estimates. This will be divided into 3 separate reports. One would be the estimated max levy for those levy-controlled funds, so your general fund, along with guidance for making any applicable adjustments. So for libraries, that typically be any appeals. We'll also provide estimated levy needed for debt service funds. Now, these are outside of your max levy estimates. So the max levy you have is typically just for your general fund, unless you're that one special library. And for debt service, that's in addition to your max levy. Now, we'll also provide an estimate of property taxes for those cumulative funds, which I don't know of any libraries that had one certified last year, so I'm going to skip that one. So property tax cap estimates, or cert breaker, we're going to issue our estimates by July 31st, and we'll provide this to every library and every other unit. Now, these will be totaled by max levy type. For libraries, you just have civil. That's it. Now, next two I'll skip because it doesn't really apply. But here's an example for a township. For a library, you're just going to see the first and last one. Civil max levy, so here it's $1,300. That's the example amount for your general fund. Then at the very, very bottom, or second at the bottom, it has your debt service fund credits. Now you may notice, especially, except for those in the back, there's a line drawn through it because that's more for informational purposes only. That's how much you're estimated to lose out of your debt service funds due to the over 65 circuit breaker cap, but we won't account for that in Gateway. So essentially, you'll see civil max levy fund credits, and that's the amount you'll add to your general fund. Cumulative funds, libraries typically don't have. And let's talk about debt management. So all taxing units, including libraries, must submit their debt information by March 1st. Most of you already have. Now, any new debt must be submitted in Gateway's debt management within 30 days of closing or finalizing that debt. Now, if you do anticipate closing on any new debt by December 31st, please let your field rep know. Otherwise, we may not give you a levy for it if we don't know about it. So good communication with your field rep is definitely a good thing. But it has to be closed on fully by December 31st of this year to receive property taxes to repay it next year. Now, the debt worksheet itself, if you do have debt, is populated by linking the debt management debt reports to the debt worksheet. Now, these linkages roll over each and every year. So unless you have a brand new debt, there's simply not much you need to do with setting that up. It's just a matter of going into Gateway and marking when you make your debt service payments. Now, if you do need any help, please contact our Gateway support team if you need any help linking those or anything technical. If you have any questions about what payments am I making when, contact your field rep. Now, let's see if we have any questions before we get into the budget forms.
There are no questions at this time.
All right, any in the audience? I know cert breakers are confusing. You guys understand all of this? All right, you guys are very trusting. I'll take good care of you. All right, so Gateway is designed to make things easy for you. So there's a caveat to that, unfortunately. On the budget form menu, it starts with the current year financial worksheet, goes to your debt worksheet, and then forms 1, 2, 3, 4A, 4B, whatnot. If you work from the top down, you're actually going to make things quite a bit harder for yourself. But if you follow this budget form flowchart, it's going to make things really, really easy. So there's a couple of different ways we can do this. First off, I'm going to keep plugging the budget workshop. It's really, really important. So let me go through, you go into budget workshops. I'm going to assume that for this first example. So first example, prior to your budget workshops, you have Form 1 completely done. All of your published columns there, and you print it off, and you tell your field rep how much your budgets are for each fund. So what we can do is we upload your current year financial worksheet for you, your debt worksheet, hopefully you already have done, because that feeds it. That helps you calculate the budgets for Form 1. Form 4A, just clicking a single button on Form 1. Form 2, we will actually upload for you. Just bring in some of those more local revenue code estimates. And Form 4B helps you calculate your levies and your tax rates. Well, we're already going to do that for you at budget workshops. Form 3 is your advertisement. We're going to upload that one for you as well. So essentially, you're going to walk away, assuming you already have your debt worksheet done, if it applies to you, and the Form 1 done, essentially done. The only other thing you'd really need to do is click a few buttons to move things over to the adopted column if you don't anticipate any changes, and also complete your Form 4, which really feeds off the Form 4B. It's a matter of adding your adoption date and your board members. So that was pretty easy. Now let's review if you don't go to budget workshops and you're doing this all on your own. First off, I'm sorry. If you change your mind, call us. We'll help you. But you would want to do your current year financial worksheet first, your debt worksheet if it applies to you, Form 1 and Form 2. You can do those in any order you want. Just make sure you do those 4 first. Form 4A is only a summary of Form 1. Once you have Form 1 done, just click a button on 4A and it pulls all that information over for you. Now once you have those 5 forms done, all that feeds into the first 2 sections of Form 4B. Once you've done that, you simply calculate your levies and your tax rates. Then you have your budget, levies, and tax rates for each of your funds. You can pull those into your advertisement, which is Form 3, then also Form 4. So still not bad, but not as easy as going to your budget workshops. Now, one thing to note is that the budget forms look at an 18-month period. The current year financial worksheet looks at the last 6 months of this year, while a lot of the other forms may look at just the budget year itself. But I'll explain that in more detail later on. So let's first look at the current year financial worksheet. As I said, 18-month period. This one looks primarily at the last 6 months of this year. It's actually formally called the Line 2 worksheet, and it calculates different lines of the Form 4B. You have Line 2, which is the most kind of cumbersome calculation, Line 3, 4A, 4B, 6, and 7. Now, Line 2, this is kind of as a simplified... Yes, absolutely. So these I'm going to go over pretty quickly, but the ones that apply most to you, I'll talk in the next slide or two. But Line 2, just kind of as a simplified example, your budget for your general fund is $100,000, and you spent $40,000 in the first 6 months. Without any other adjustments, you have $60,000 left to spend for the last 6 months. Seems easy enough. That's the amount that gets pulled into Line 2 of Form 4B. So it shows a snapshot of the budget and financial standings as of June 30th, and you should complete this form for every fund that you have. And it calculates 6 different lines of the Form 4B. Now the most common lines are Line 2, which is simply your budget left to spend in the last 6 months of this year. Line 6 is your June 30th cash balance. And Line 7 would be typically your December settlement. How much you have in property taxes to receive in the last 6 months of this year. Now again, most non-school units, all libraries, can have this uploaded for you at budget workshops. Any questions with the current year financial worksheet? Okay. Now let's review the debt worksheet. So first off, if you do not have any debt, this does not apply to you at all. You don't even need to submit it. But what this form does is it pulls in those debt reports from debt management, and it allows you to tell us when you make your debt service payments. So it's pretty often that debts have payments due January 1st and July. So January and July. But by working budgets over the last few years, I've noticed it's split pretty evenly between people that make their payments in July or actually the month prior. So that's where it's really important to kind of ask yourself, okay, it says July 1st, but do I make the payment itself in June or July? So the debt worksheet captures the payments that need to be made in actually a 2.5-year period. And we have Line 2, which is the last 6 months of this year. Line 1 which is the 12 months of the budget year itself. Line 11A, which is the first 6 months of the following year, so 2019 in this case. And line 11B, which is for the last 6 months of 2019. Amortization schedules will be used by your field rep to verify these payments. And again, any new debts must be closed on by December 31st to get a property tax levy to repay it. And you would not even need to submit the debt worksheet if it does not apply to you, if you don't have any debts paid by property taxes. Now let's talk about the Form 1. This is hopefully what everybody will have done prior to the budget workshops. It's pretty helpful. This is also the first place where property tax caps or circuit breakers really come in play. So it's broken down by fund and department, if you have any. Then it's further broken down by expenditure category. So we have personal services, supplies, services and charges, capital outlays, debt service, and there's a new one there on the far right, property tax caps, which in the next couple slides I'll review how to actually account for circuit breaker losses. And the line items here have all rolled over from last year, except for capital outlays. And that's because Gateway is kind of designed for all unit types. And when we initially started doing this rollover process, it was assumed that capital outlays are typically just one-time expenditures. So if somebody bought a fire truck, probably not going to buy a fire truck next year. But one thing I've noticed from speaking with my libraries is you guys typically buy books and things each and every year. So one kind of thing you'll need to make note of is if you do have any capital outlays, which you probably very well do, you'll need to manually add that line back in. Any questions about that, contact your field rep or Gateway support. Like I said, there's 7 different line items or expenditure categories, and township assistance does not apply to you. So it breaks down your budget by category by different line items. Every fund should have a Form 1 completed for it. And if you do have any departments within maybe your general fund, make sure that you complete the Form 1 for every department in that fund as well. Now, the Form 1 has 2 different columns, advertised and adopted. I would just focus on the advertised one first. And then if you don't have any changes between advertised and adopted, there's a button on the top right that'll move everything over for you. Now, Form 1 data will all be pulled into Form 4A by clicking a single button. Now let's review property tax caps and the process. So it's past July 31st and we've issued our circuit breaker estimates, or you've gone to budget workshops and we've printed something off saying this is your circuit breaker loss for the general fund. What you can do is go into your Form 1, select the general fund if it's not there already, and click on that property tax cap blue tab on the far right. You'll already see a line item there that says property tax cap impact. It cuts off, but it says impact. And then what you'll do is you'll plug in that circuit breaker loss in the advertised amount column and maybe even the adopted column and click save. That's most of what you need to do for the Form 1 for circuit breaker losses. So let me go and read through the bullets to make sure I didn't miss anything. But you'll enter the property tax cap estimate in the expenditure category tab of Form 1 for all non-debt service funds with levy. For libraries, unless you're that one special library, it's only your general fund. Now, be sure to carry the total gross or increased budget to Form 4A and Form 4B. So to recap Form 1, 4A and 4B, that total is your total budget you expect to spend plus circuit breaker. Now, on the bottom of Form 4B, it'll break down in the general fund the circuit breaker amount entered for that one fund. And the reason for that is it's going to do that calculation for you when you pull it into Form 3 and Form 4 where it subtracts that. So only the net budget or budget you anticipate spending is pulled into Form 3, your notice to taxpayers, and Form 4, your adoption resolution. Any questions about that? Nope? Alrighty. So I had a feeling nobody would ask any questions, so I've got a few for you. So a couple ones that we got last year were my budgets don't match. How can I fix this? So if the budget's on Form 3 and Form 4, so this is your advertisement and your adoption resolution, are lower than Forms 1, 4, and 4B by the amount of circuit breakers, it's actually working correctly. It's supposed to be different. So for those internal forms, we increase your budget to give you a realistic operating balance, but that's more of a tool that we don't want to share that widespread with the public because it's kind of confusing. It's very confusing. So it's it's subtracted out. What you advertise and adopt is only the budget you anticipate spending. Now, another question that we got is, can I use my own estimates? So, especially last year, where our estimates weren't as well refined as they will be this year. Yes, you can use your own estimates, but please be careful for a couple of different reasons. If you happen to overestimate your circuit breaker losses, and let me try to think about this pretty thoroughly because I don't want to miss anything, but if you overestimate it, you may need to do additional appropriations, which kind of as a quick tangent means your budget gets cut. And if you're already at that maximum budget and your budget gets cut, your maximum budget that you can adopt your own for next year would actually be lower, if that makes sense. So libraries typically want to not have any budget reductions because the budget that gets the growth quotient applied to it isn't your certified budget plus any additionals, it's just your certified budget. So libraries are typically pretty protective of that number. We have a question.
So did you just say that doing an additional appropriation actually reduces your budget for the next year? Is that what you just said?
No, so the question was, doing an additional appropriation, does that decrease your budget next year? It does not. It would increase that, but here, if you happen to overestimate your circuit breaker losses and you're at that maximum budget and things are really, really tight and you end up getting a budget cut because of that, then your certified budget for next year would actually be a little bit lower than if you predicted it accurately. And this is very confusing, and I'm sorry about this, but let me answer that one more time and see if I can be a little bit more clear. So you have your certified budget for this year, and that certified budget is what the growth quotient gets applied to. So let's say it's 3.8%. Again, that's the growth you get. But let's say your circuit breaker estimates that we give you is $10,000, but you estimate it at $1,000, and turns out you're just barely funded without anything extra after you cut down our estimate. But it turns out to be higher than what you estimated. Sorry. Nope. Wrong there.
You said it two different ways.
Yeah, yes, I did. Other way around. So if you overestimate your circuit breaker, you may end up with a lower budget than what you could have had if you didn't. So if you overestimate it, your budget could have actually been higher if you did not. So that might result in a lower certified budget. Okay? And the growth quotient for next year's budget gets applied to the certified, not any additionals that get added on to that. Now on the flip side, if you underestimate your circuit breaker losses, the downside of that is we're probably going to go with your estimate. And if you underestimate it and things are pretty tight, it may end up that your budget's not actually funded. So you go through and you're spending your money as if you're going to spend your entire budget, and it comes to mid-December and you run out of money to operate off of. So, and this really more applies to libraries that are really pinching pennies and just they really don't have anything extra each and every year. But if you do choose your own estimates, please be careful, because if you overestimate it, it could be bad. If you underestimate it, you may run out of money to operate off of. So both are pretty bad, but let me give you tips on how to provide better estimates. So first off is do the pre-budget worksheet. That's the best thing that will help us with our estimates. Now, if you get our estimates and you don't quite agree with them, you can use your own, but I would definitely look at our estimates first, then the actual estimates for 2017. So we have those currently. We have 2017 actual and 2018 predicted or estimated. Now, if ours is quite a bit higher than it was for this year, use your best judgment. We haven't done this calculation yet, so we don't know how it'll fare to the current year. But you are able to use your own estimates. That's kind of what I'm getting at. But if you do so, at least look at our estimates, then look at this year's actuals. If you have any questions, contact your field rep, and we'll be able to explain things a lot easier when it's specific to your situation. When you try to present to all the different libraries or all the different units, there's too many caveats to really be that specific. But contact your field rep or attend your budget workshops, and we can really help you with that. So with that out of the way, will this whole gross budget, net budget always be the process? And tentatively, no. Dan kind of alluded to this But next year for pay 2019, the DLGF intends to redo the Form 4B. So mostly still the same information, just in a different order. The difference is that, and again, this is tentative, we may get rid of the net and gross budgets and just have there be a single line on Form 4B for circuit breaker. So that'll make things a bit easier and straightforward. Absolutely.
I don't want to get too political or anything, but I understand not wanting to publish the circuit breaker amount in the public notice. But is there any plan of possibly making that part of the publication so the public can see the impact of the circuit breakers?
So we have a really, really good question that I've got a really good answer to, thankfully. So the question was, with circuit breakers aren't part of the advertisement, which makes sense, but is there a way that we could include it so they realize the impact? So far, I've only been speaking in regards to the budget itself. Separately on the Form 3, your notice to taxpayers, it will present your max levy and the circuit breaker estimate. So it's actually already on there. So they do see the impact of circuit breaker, except the taxpayers aren't really confused with the whole net and gross approach. It's just your actual budget you anticipate spending. But your circuit breaker effect, the estimated one, is on the Form 3 itself already. Good question. So with that, you have your Form 1 done already, and we're on to a much, much easier form, your Form 4A. Essentially, once you have Form 1 done, just go into Form 4A and click the button on the top right-hand side. This will pull in everything you need. If you ever make an update to Form 1, just re-click this button and it will pull in the information. So essentially, it is just a summary. There's 2 columns, advertised and adopted. Now with Form 2, these are your revenue estimates. It looks pretty similar to Form 1, except it's only broken down by fund, not departments. And this accounts for all revenues besides property taxes. Now you'll notice there's 2 columns. These are not advertised and adopted. These are for 2 different time periods. The last 6 months of this year and all 12 months of the budget year itself. So this is where we could upload this for you if you come to budget workshops. Now it accounts for all revenue besides property taxes, and you'd complete this for every single fund that you have. Again, bring in some of those more local revenues, excise, CVET, FIT, we have already, but we can work with you to complete this Form 2 and upload it in the Gateway at budget workshops. This slide just reviews that the first column is for the last 6 months of this year, and that becomes line 8A of Form 4B, and column B is for the whole 12 months of the budget year itself. That becomes 8B of Form 4B. Now let's kind of review this again on what information pulls into Form 4B. You have the current year financial worksheet, debt worksheet, your budgets on Form 1 and 4A, and Form 2. This calculates as really pulls into the first 2 sections of Form 4B. So here's a snapshot of Form 4B. There are 2 main approaches to this. One is going to budget workshops and get this uploaded automatically for you. And then the assessed values there on the top right-hand side, the published amounts are all there. And if your board doesn't anticipate any changes, you just click a button and it copies everything over for you. That's the absolute easiest way to do your Form 4B. And it's what I'd recommend. But let's say you want to do this yourself, or just want to understand the form. That's definitely a good idea to do. So make sure for every fund on the top right-hand side, it has your net assessed value for the library. Now there are 4 sections now. The first one has to do with your expenses for that 18-month period, the last 6 months of this year and the budget year itself. The second section has to do with funding. So your cash balance, your December settlement, and any miscellaneous revenues. That's everything besides the 2018 property taxes. Now, the third section is something that does not populate from the other forms. There's a gateway calculator in between lines 10 and 11 that you can use to help calculate these fields for you. So in between lines 10 and 11, choose you want to use the gateway calculator, and you'll see 3 options appear. The most common one, it says enter levy, fill line 16. If you check that, sure enough, you'll go down to line 16 and enter the levy that you want. Once you click save, it'll calculate most of the other fields for you. The only exception to that, which I may lose a couple of people because it doesn't apply to them, would be the operating LOIT. So if you are a LOIT levy for East County, you may also need to enter line 13B. But easiest thing to do again is just go to budget workshops. The very, very last table or section here would display the property tax cap impact from Form 4A. And just remember, this amount will be subtracted from your budget at the top when it gets pulled to Form 3 or Form 4. So Form 4B is known as the 16-line statement, the financial statement, or the fund report. If you're looking at your 1782 notice, again, it looks at an 18-month period. And there's two columns, just like the Form 1 and Form 4A. There's the advertised column, which reflects the budgets, rates, and levies as prepared by the fiscal officer. Then the adopted column, which reflects the budget, rates, and levies as approved by the fiscal body. This provides an estimated levy and tax rates by fund. Again, lines 1 through 10 pull in from the other forms, and 11 through 7 calculate the property tax levy and rate. The Gateway Calculator can help, but attending budget workshops maybe will help most of all. And the property tax cap section at the bottom pulls in from Form 4A. Now let's review County Council review. So this assumes that you are going to adopt your own budget. So no forms are required to be submitted by non-binding units. And this is supposed to take place at the County Council's first meeting in August. They're not going to review any forms that the library submit. They're just going to review the DLGF provided max levy and circuit breaker estimates. And they may issue recommendations, but if they don't, they're supposed to send out a copy of the meeting minutes. Now let's take a look at Form 3. And I know that for those of you in the back, it'd be pretty hard to see. But the very first portion really just tells the public when and where the public hearing is and the adoption meeting is. Now, if you can really squint on the bottom left, that's where it tells you the estimated civil max levy and the property tax cap credit estimate or circuit breaker losses. Now, the bottom portion of Form 3 will list out by fund your budget, property tax levy, and any excessive levy appeals. And just again, remember, I keep saying this, but the budgets that pull in from Form 4B will have the circuit breaker amount reduced. So it's only, your budget's only going to be what you anticipate spending. Now, Form 3 should be advertised by submitting Form 3 at least 10 days before your public hearing. And for libraries, there needs to be at least 10 days between the public hearing and the adoption meeting. Now, 10 or more taxpayers can file an objecting petition within 7 days of the public hearing, like Dan alluded to. And if there are any objections, the fiscal body of the political subdivision, typically your library board, if you're adopting your budget, must adopt with its budget a finding concerning the objections in the petition and any testimony presented at the adoption hearing. Failure to do so may jeopardize approval of the unit's budgets, rates, and levies. So let's review some of the deadlines. There are definitely a couple for Form 3. Again, you need to submit the Form 3 at least 10 days before the public hearing. And if you're waiting until the absolute last day, it's October 12th. The last day you can hold your public hearing is October 22nd. And that assumes you adopt on the last day, which is November 1st. Now, these are the final last days for this year. But please be sure to check the budget calendar, because if November 1st falls on a weekend or a non-business day, those dates may get shifted around a little bit. But these are the final dates for this year. Now let's review some of the information that's required to be advertised. We'll need the date, time, and location of the public hearing and the adoption meeting. And the DLGF will automatically populate the max levy and circuit breaker impacts. Then for every fund, we'll need the fund's name, the budget, the levy, any excessive levy appeals, and we'll also populate the current fund levy as well. Now, there is one other question to be answered with the Form 3, is has the territory of the unit changed? These are typically attributed to annexations or extensions of services. So typically the boundaries of library or the district of library is changing. And this question will impact how your notice is handled for our online advertisement. The website is budgetnotices.in.gov. It's a pretty cool site. I'd recommend you go there. But once you go there, you can type in your address, and it'll pull up a list of all the Form 3s that apply to you within your county. Now, one thing that we couldn't do is know exactly how annexations would impact that one single address. So it'll say, here are the Form 3s that apply to you, and And at the bottom, it'll say, here are some units in your county that have their boundaries changing, and these may or may not apply to you. So that way we just make sure to present the taxpayer with all the notice to taxpayers that may apply to them and their address. So again, I've said this several times. I'm gonna keep saying it just because it's very important. But if you go to Budget Workshops, we can upload this form for you. So Form 3 must be submitted at least 10 days before the public hearing. Very, very important. And it's pretty easy. So let's assume you go to your Budget Workshops. Simply open up the Form 3, make sure it's correct. And at the very bottom, you'll see a yellow bar that says Ready to Submit. Check that box. It'll turn green. Then back on your budget form menu, you'll notice Form 3 has a green button that says Click to Submit to DLGF. Click there, and the whole form will turn green. That's your confirmation that has been submitted. Just make sure that's done at least 10 days before your public hearing. Now let's take a look at the Form 4. This is the resolution that you print off to adopt your budget, levies, and rates. At the top, it just has the name of your board, then the type of your board, which is library board for most people, that pretty much anybody that adopts their own budget, and then also the date of adoption. The date of adoption in most cases should be the date of adoption present on your notice to taxpayers. The only example I can think of where it wouldn't match is if you hold your adoption on that date that's advertised, but you decide to continue the meeting to another time. Now, if you do that, make sure you do not adjourn your meeting. Simply continue it and keep good notes in your meeting minutes as well. Because if the adoption dates don't match between the Form 3 and Form 4, your field rep will be asking for a copy of those minutes just to confirm that it was continued. Now, in the middle section, it lists out any fund that you have with the budget, levies, and rates broken down. Now, ideally, none of these will be zero anymore, even if you happen to make a mistake, because we have some safeguards that help prevent that. But we can't catch everything, so definitely make sure you double, triple, quadruple check these figures just to be safe. Because anything that is signed and adopted on Form 4 is your formal adoption. Then lastly, make sure your library board is present down at the bottom. So the Form 4 is the resolution that the fiscal body used to adopt the budgets, levies, and rates. And again, the budget, levies, and rates for all funds must be listed. Now, the budgets, levies, and rates all transfer from the adopted column of Form 4B automatically. But the one caveat there is that the budget pulls in from Form 4B will have the circuit breaker amount at the bottom removed from it. So check the Form 4, make sure it's what you actually anticipate spending. Now again, double, triple, quadruple check the amounts on the Form 4 because these are what's actually being advertised or being adopted. Now we have to give you the lowest of what's advertised or adopted. Typically they're the same, but if there is a mistake somewhere or discrepancy, we have to use the lowest figure. Now the adoption date should be the same shown as Form 3 unless you're continuing your meeting. Next one does not apply to libraries at all. And the attestation line, libraries will typically see. You can complete it if you want to, but you're not required to. Please make sure that all the members mark their vote and sign the Form 4. If they don't, we may not be able to count their vote. And a good safeguard against that is both checking that they sign and check the box, and just keeping good minutes as well. Now, once you do have the Form 4 signed, make sure that you scan and upload that in the Gateway within 48 hours. Now, the 1782 notice recipients form should be easier to complete now because we roll over all those contacts from last year. Just be sure that everybody is on the form. You delete anybody that's no longer with you, add maybe some secondary email addresses, but any email address on this form will be emailed a copy of the 1782 notice once your budget's reviewed. And you'll have 10 days to respond with any requested changes. Last year's will be carried over, and we do recommend adding multiple recipients to this form. Now let's review uploading the signed Form 4. We are almost done here. So you log into Gateway, click on Budgets, and where you typically click View Forms, enter and edit budgets with a green $sign. Beneath that, it'll say Upload Signed Form 4 and Other Documents. Sure enough, this is where you click to upload your signed Form 4. The very first one is the type of file you're uploading. It's just your Form 4, leave that selected. Type in a description, we're not too picky, and type in Form 4. And then you'll click Browse to help find your file. Now at this point in time, you would already needed to have your signed Form 4 scanned and saved into your computer. But one thing I would recommend is saving it with a name that you can easily identify it. Form 4 is great, but the problem is when you work in the same position year after year, you're gonna have a lot of Form 4s. So you might want to add the year there as well. Once you find your file, click Upload, and you'll see it appear in a section down at the very bottom. Now, you'll see the file name itself in blue and the delete option on the right. There's a reason for both of those. On the far left side, please click on that file link to actually open it up and make sure you upload the right file. Maybe it was incorrect Form 4, maybe it was some vacation photos or something else that we don't need to see, and that's why we have the delete option on the far right. So go through, make sure it's the correct file, and delete anything that's not. So you do have 48 hours to upload the signed Form 4 into Gateway, and also submit your budget forms through Gateway as well. And that's just after your adoption. Now let's review how us field reps are going to review your budgets. Now for debt service funds, you're typically going to receive that full normal review. And then for levy controlled funds, libraries typically don't have, so I'm going to skip that one. And there's the code site that mentions this. So there's essentially a three-pronged test that dictates how we work your budget. So if your adopted levies exceed the max levy, you're going to get the full review. Now, at budget workshops, we'll know what your max levy will be unless there's any adjustments, such as an excess levy appeal. Now, if your adopted levies are within the max, but your budgets aren't fundable, which kind of as a summary, line 11 is your operating balance. If it's negative, probably not going to be funded. So we'll actually have a pretty good idea if you're going to go through short review or full review at budget workshops. But if you're within your max levies and your budget's not funded, you're going to get a full review. Now, if you're within the max levy and your budgets are funded, it's pretty likely that you're going to get a short review. So that means we just certify your levies and your rates, and we accept your budgets and revenues as submitted through Gateway. So that's pretty much the easiest possible solution for you. Now, do you have any questions currently? No? Did I really do that good a job of explaining? No, Cert Breaker gets a little confusing. But we don't have any questions right now, so let's go ahead and review contact information in case you do later on.
Whoops, just a minute, I stopped sharing.
Okay.
Oh, shoot.
It's okay.
Sorry about that.
No worries.
No. No.
If not, it's okay.
I don't know what happened.
Probably more so.
I don't know why I don't have yours. All right, sorry about that.
Should I just go ahead?
Just go ahead. I'm sorry, out there in the webinar, we don't have the contact information.
All right, so we have several different resources available. One is, again, at the top of Gateway. If you ever need help, you can click on User Guides. There will be a list of user guides for each and every fund that we have, or every form that we have. Now, let's say you're on your Form 4B and you see operating balance. Think, okay, Ryan told me this is really important, but I don't remember what it is. You'll see a blue eye next to it. Put your mouse over it, and it'll tell you exactly what that operating balance is and why it's important. Now, if you happen to not be able to attend some of our local trainings, which the presentation I just gave was essentially what we're giving statewide right now. But if you just want to hear my voice again or just want a refresher, we have our YouTube channel as well, where we are actually working on posting essentially a version of this presentation on there currently. We also have their DLGF memos page, which you can get to by going to in.gov/DLGF. On the top left-hand side, it says Memos and Presentations. That's where you can get a step-by-step walkthrough of how to do an additional appropriation or a budget calendar or a lot more. Now, you're also welcome to email or call us if you have any questions. You can contact the Department for Gateway Support at gateway@dlgf.gov. We also have a new additional appropriation email request because Linda is no longer with us currently, but hopefully coming back. It's additional appropriation requests at dlgf.gov. Now, let's say you need help with your budget forms. If it's just entering a number, contact our Gateway support team. But if it's with what to enter, contact your field rep. And if you don't know who your field rep is, you can call 317-232-3777. That's the general phone number. They'll ask which county you're with, and they'll forward you on to who you need to speak to. Or you can go to our Contact Us page and find a list of the field reps and the map. And here's a list of the 12 field reps we have currently. If anybody really loved being working at a library but wants to try being a field rep, we are currently hiring. But let's say if I'm your field rep, Ryan Burke, my cell phone number is 317-719-3546, and rburke@dlgf.gov. I've said this before, I'll say it again. Please attend budget workshops. But more importantly, if you do ever have any questions, please let us know. As field reps, that's exactly what we're there for. It's just helping you. And that really is just job security for us. But I mean, just asking questions help